Flexible spending accounts and dependent care accounts through Tasc. Flexible spending accounts are available to all eligible full-time employees. This allows employees to set up an account to help pay for medical, dental, vision, and many other items using pre-tax dollars. Pre-tax dollars means the money you contribute into your flexible spending account will never be taxed, thus reducing your taxable income up to 30%. Money can be used by you, your spouse, or any tax dependent in your family up to the age of 26. It allows you to budget your known health expenses throughout the year. You can contribute up to the maximum of $2,750 in your FSA account. But be conservative when determining how much money you need for the benefit year. Typically, you would calculate any deductibles, prescription copays, doctor copays, dental work, braces, glasses, over-the-counter medication, and many other items. There are 3,000 different items that you can purchase with pre-tax dollars. This calculation includes things you know you'll spend during the calendar year. Your annual election will be spread out over 52 payroll deductions. The full amount of your election is available as of January 1st, even though you haven't paid anything into it. A great resource is www.fsastore.com to see a listing of eligible items. Because the money is pre-taxed, once you set up your deductions, you cannot make changes unless you have a life-changing event. There are changes to the flexible spending program as of 2020. You no longer need a prescription from your physician to purchase over-the-counter medications, and feminine hygiene products can now be purchased with your FSA card. How does my FSA account work? You will receive a debit card that you can use to make purchases along with a welcome kit explaining how to sign up online for your account and to download that Tasc app if you own a smartphone. When you go to the pharmacy, doctor, or other providers, you would use this card to pay for your services. Because the card requires a special card reader, you may not be able to use it in the grocery store checkout for your FSA purchases. If that is the case, you will need to purchase over-the-counter products at the pharmacy counter. Certain purchases will require that you send in substantiation or proof of what you're using your card for. This can be a receipt for glasses or over-the-counter products, an EOB for dental work or medical care. Typically, you will not need to send in proof of doctor copays or prescriptions. If you forget your debit card, you can still pay for the services out of your own money. You will be required to send in a copy of the receipt or your EOB for a refund. The refund will go back on your account with the MyCash feature. Your MyCash feature is used as a simple MasterCard. Rollover. What happens if I have money left over? It's important that you monitor the balance in your flexible spending account throughout the year. Each benefit year ends on December 31st, but you will have an additional 90 days starting January 1st for any invoices that may come in the next benefit year for services rendered in the prior benefit year. At this point, you would want to file a claim with Tasc and be reimbursed for services on your MyCash account. You would only use your debit card for the current calendar year. At the end of the 90-day rollover, any money that is left over in the account, and it is $550 or less, will roll over to the next benefit year. Any money over $550 would be forfeited. This is why it is so important only to contribute what you think you will use and to monitor it throughout the year. Dependent care account. What is a dependent care account? A dependent care account helps families pay for child care and elder care up to an annual maximum of $5,000. This separate reimbursement account assists you with the burden of daycare expenses using pre-tax dollars through payroll deduction. A child under the age of 13 or a child, spouse, or other dependent who is physically or mentally incapable of self-care and spends at least 8 hours in your household is eligible under a dependent care account. How does it work? Unlike a flexible spending account, the weekly contributions need to be accrued in your account before you can pull money out. Once you have enough money in the account, you can use the debit card to make payments or file a claim with Tasc, and the money will be reimbursed back to you. What are eligible expenses for my dependent care account? Licensed daycare, licensed elder care, nanny expenses, nursery school, before and after school care at a licensed facility. What is not covered under my DCA? Overnight camp, transportation, tuition, activity fees or supplies or field trips. Rollover. What happens if I have money left over at the end of the year? It's important that you monitor the balance in your dependent care account throughout the year. Each benefit year ends December 31st, but you will have an additional 90 days starting January 1st for any invoices that may come in the next benefit year for services rendered in the prior benefit year. You would want to file a claim with Tasc and be reimbursed for those services as soon as possible. Any money that is not spent throughout the plan year or the 90-day runoff period would be forfeited.